We are here today on Ask a Professional with Ralna Burridge, and we're going to be discussing mortgages. Thank you, Ralna, for meeting with me on such a busy time of year, I know. And I've known Ralna for over 7 years, and she's been an invaluable source to me and my clients. And I'll let Ralna speak a little bit about her experience and her history.
Perfect. Thank you so much, Deanna. I've been a mortgage broker since 2006, and I enjoy it very much. I work for a branch of Dominion Lending called Citywide Mortgage Services on West Broadway. And I'm here with Deanna today because she had some questions regarding helping home buyers, especially first-time home buyers, figure out what they need to do for a mortgage. So one of the first steps that someone should do is get their paperwork in order. If you're self-employed, find your most recent 2 years of tax returns. So that's the T1 General. We usually need the first 4 to 5 pages of that, preferably the whole thing, as well as your statement of business activities and your notice of assessment for the last 2 years. So for example, we are currently January 2017, so most likely if you're self-employed, you haven't done your 2016 taxes yet. So we would need 2015 and 2014. If you're a salaried individual, it's a fairly easy process. We need a letter of employment. The letter of employment needs to state when you started at your place of employment, your job title, what your annual salary is. It needs to be on letterhead and ideally signed by your employer, but it doesn't always have to be signed. And then we'll also need a recent pay stub. And some banks, depending on where we send your application, some banks will also still want your notice of assessment. If you're an hourly paid person, then your letter of employment needs to state how many hours per week you're paid for and what your hourly rate is. If you receive any bonus or overtime income, then we'd like to get 2 years of T4s as well, because we like to use a 2-year average.
Fantastic. And thanks for that, Ron. That was great. I know that from my clients, I get a lot of questions. Well, why don't we just start looking and then put an offer in? Why is getting pre-approved so important?
Yes.
And that's a big one. I always encourage my clients to get pre-approved. Go talk to a lender. Go talk to a mortgage broker. Talk to Ralna. See where you can get your financing. Know what you can get approved. Why is that important?
Oh, it's so important. I deal with it all the time, when people have they've gone and placed an offer on a property. Just this morning, someone went and placed an offer on a property. They had verbally stated a certain income to me just a few days prior to when they actually called me and said, hey, I placed an offer, and they really sort of, I needed to verify that person's income, because it turns out the income that they verbally stated was a combination of 2 sources, one of which the sources I could not use. And it's just very important, because sometimes people have an idea for what they think they're going to qualify for, but so much has changed, and so much continues to change with all of the changes in the rules and the changes in the bank qualifications, that we can't rely on older information, even information that's sort of found online. It can be a very inaccurate picture, so it's really important for someone such as myself to thoroughly take a look at your situation and to give you an accurate number, because you want to find out the most that you qualify for, but at the same time you want to make sure that you're looking in the price range, because there's nothing worse than getting disappointed, falling in love with the place, and then finding out that it isn't going to work for you based on so many different factors. So it's really important to get that done.
So of course we write a contract, and Ralna pre-approves you for a mortgage, and you're pre-approved, you're ready to go, you know how much you can spend. Why is it important to still have a subject of financing in the contract? And what is the difference between being approved and being pre-approved?
So pre-approvals, a pre-approval will hold an interest rate for you, so it'll guarantee that should interest rates increase, you're not going to pay more than a certain level. Why you also still need to have a subject to financing clause in there is because the bank itself, they need to approve the property that you're selecting. Only once you've selected that property will the bank actually phone your employer to verify your employment information. Only then will they, if you're buying a strata property, only then will they perhaps review some of the strata documentation that forms part and parcel of the approval, only then will they make sure that, you know, the price that you're paying, if it falls in line within the parameters, because they may or may not request an appraisal. They'll want to review things like the strata form B to make sure there's no litigation against the strata, to make sure if there have been any assessments paid in the last 5 years, what were those assessments for? Were they for anything major? Because those things can all essentially kibosh your approval. So it is so important to still have subject to finance approval. No matter how much financing you need, you should have that clause in there.
Absolutely.
You know, there's always a few exceptions to that. For example, if someone's buying a standalone house, if the house is, you know, if somebody only needs maybe 20% financing and there's no quirks in regards to the property, like there's, you know, if it's a relatively new property, it's in a highly marketable area, you know, there can be sometimes some exceptions there, but those are always risky, and I certainly don't advise that really under any circumstance.
Fantastic. So better safe than sorry, and have a pre-approval, absolutely, and subject to financing. And why and when would you require CMHC, and what is it?
CMHC is basically government default insurance. So if you're buying with less than 20% down, it's a mandatory part of any mortgage. So it's not life insurance, it's not disability insurance, it's default insurance. So what that means is that guarantees that if you are not to make your payments for whatever reason, loss of job, sickness, whatever it might be, the bank who is doing the mortgage for you, that bank will not lose any money in exchange, because they took on the risk of doing your mortgage with less than 20% down. CMHC, which is Canada Mortgage and Housing Corporation, or the equivalent, other two insurers, which are Genworth and Canada Guarantee, for a fee that is incorporated into the cost of your monthly mortgage payment, they will guarantee that mortgage on behalf of the bank. So there's really a benefit to the bank to not lose any money in the event of your default, but there's also a benefit to you as the borrower, because you're able to get the mortgage with less than 20% down, which is called a high ratio mortgage. Now in exchange for that, believe it or not, the banks would actually, many of them would actually rather have high ratio mortgages on their books, because once it's been approved by the mortgage insurer, there's essentially no more risk for the bank in the event of your default. So sometimes they actually give us lower interest rates for high ratio mortgages, which obviously helps a lot of the first-time borrowers, but you don't have to be a first-time borrower in order to take advantage of CMHC. You can do it more than once, that's for sure.
And high ratio means 20% or less.
Correct.
That's correct, for your down payment. Wonderful. And the big talk of the town, what is the government the government grant for first-time home buyers that everyone's talking about?
Okay, definitely a question I'm getting a lot right now. It's a brand new program that came out on January 16th of 2017. We think it's a phenomenal program. The government will basically match your down, or the BC government will match your down payment up to 5%. So for example, let's say you're buying a property that's $480,000. Let's say you have 2.5% saved up from your own resources, which would be I think $12,500 or $12,000 approximately. The government will then lend you the 2.5%, so they'll match your 2.5. So now you have the 5%, the required 5%. So you do have to have a minimum of 2.5% down. Now let's say you have 5% down from your own resources. The government will then lend you another 5%. So in essence, you can have 10% down. That can help you in order to qualify for the amount of mortgage that you want. And how it works is, there's no interest for 5 years, which is great. They will amortize that loan, they'll amortize that over 20 years for you. So your initial amortization is 25 years. You have no payments, no interest for the first 5 years. When your mortgage comes up for renewal, that amount is then added onto the regular mortgage balance, and it is now amortized with your remaining mortgage balance for another 20 years at whatever the market rates are at that time. There is a slightly higher mortgage default insurance premium that's paid, It's about 0.20% higher, but for that flexibility of 0%, no payments for 5 years, we think it's a phenomenal program. We're really excited about it, and we really think it's going to make a difference for so many first-time buyers. Now, some of the things you need to do in order to qualify for it is you must be a resident of Canada for 5 years, you must be a resident of British Columbia for 12 months, your annual household income cannot be more than $150,000. The maximum purchase price is $750,000, and other than that, you know, it's you qualify for it same as you would the regular mortgage. So,
So I understand with the process and how to qualify and how to apply for it is you have to get pre-approval from a mortgage broker first and then apply for the grant. Is that correct?
Correct. Yes. Yeah. We send a copy. Like there's 2 applications that are done, and yeah, because it's a brand new program. Besides the 2 applications, and you know, we submit one of the applications to the BC Home Partnership area, and then the application to the bank.
Fantastic. Yeah. And I also have one more question from Joyce, and she asks, what other costs may be associated with buying a home? She didn't want any surprises, so she wanted to kind of get a sense what other costs might be associated.
Well, as a mortgage broker, I like that question because as a mortgage broker, there are no fees from myself as a mortgage broker. Private mortgages are a little bit different, but that's a whole completely different thing than what we're talking about here. So other than your lawyer's fee, if your home is above a certain price threshold, you will have the property transfer taxes to pay. But if you're a first-time buyer and if your home is, you know, below the 475,
that's right.
You will not have any of that that property transfer tax to pay. Now you will have to pay minimal, you know, some strata properties have some move-in, move-out fees. Sometimes you'll have to pay a prorated of the city taxes. You'll have to pay a prorated adjustment depending on when in the year you're closing. The seller has to be reimbursed for the property taxes that they've already paid, but that's different than the property transfer tax. So I would say, you know, if someone's buying a property that's $450,000, and if they're a first-time home buyer, then I would say, you know, just budget for maybe around $3,000 approximately, which will cover the legal fee in most cases. It'll cover some municipal taxes that may have to be paid. So that's usually sort of a good guideline.
Fantastic. And of course, your inspections, we want to make sure that you budget for that, and that's anywhere from $400 to $500.
Oh, for sure.
And that's quite important. Right, that basically wraps it up. If you have any more questions for Ralna, or you want to see if you qualify for your next mortgage, please contact her. Her phone number is 604-790-7253, or her email. What is your email there? I don't know what off heart.
It's ralna@citywidemortgage.ca. So ralna@citywidemortgage.ca. I always like to point out there's a T in mortgage. A lot of people forget that. So
that's wonderful. And we will be interviewing other professionals soon. So if you have any questions for lawyers, appraisers, inspectors, please send them my way. My phone number is 604-789-8202, or you can contact me by email, and I'll put that right on the video. Thanks so much.